Hey, it's Steve and Mike with Real Estate on Record. We're doing a quick podcast just based on the new mortgage regulations that just popped in this week and just how this is going to impact you as an end user. Mike, what do you think, buddy?
Yeah, no, I think they're obviously showing us here that, in my opinion, anyways, that they're not going to fix the problem with affordability in the sense of prices coming down, but rather change regulation around making what we currently have more affordable. Last week they changed two or three different things now with mortgage rules that are gonna obviously make our monthly payments cheaper. We'll be indebted for a longer period of time, but our monthly payment, most people when we are shopping for houses, we're looking at the price, obviously, but it's more when we take it back to the mortgage broker and seeing how much it's going to work out to on a monthly basis. And that's what their biggest decision maker is. And if they can afford a monthly, they're most likely going to buy it. So obviously these mortgage rules that they're putting into play are making everything a little bit more affordable on that monthly basis, right? So these rules are coming in December 15th. The first one being the 30-year amortization. So first-time home buyers and new construction buyers will be able to amortize over a 30-year period versus obviously before they can only go up to 25 years.
But from my understanding, it was at one point it was 30. I'm trying to like again, I'm just a lot of things in my mind, so memory is not the greatest. But I think we were at 30 one time, and I think they brought it back to 25 at one point, right? Now they're just bringing it back to
I
30.
think that I think that was when the stress test was put
Came
into.
in,
I think that was like what 2017.
maybe.
It might have been around there when things were hot, right? To protect people from shooting themselves in the foot. But now we're unwinding that beast again a little bit if that's the case. I did a few numbers here anyways, like just roughly like on an $800,000 mortgage, right now a 5-year fix around 4.75%, let's say, versus a 30-year to a 25-year amortization. It was about $390 a month in payment drop, but in percentage form, that's like 8.5% more affordability, right?
Buying
So
power. I think
buying power
it's the
monthly.
buying, yeah, buy.
Yeah.
Yeah, and again, it's not healthy. Obviously, the economy suffering, so they want to prop up the market. Clearly, this is all these new regulations. Which, I mean, for the end user, I think it's just more debt, like you're saying earlier. It's going to be more debt for them, and like longer, more amortization rate, kind of time rather, length of time, and but it also keeps the market propped. So I mean, at the end, as long as prices don't fall, maybe this will chew up a lot more inventory, and get us back into like a super hot market, which sort of happening now. Like I mean, with your experience now, you said there was a few bidding wars you went into in the last couple of days.
Yeah, a few successful bidding wars. We didn't get the property mainly because, as we were talking about earlier, we had a small window of using an SPP, sale or purchase of property, and I could tell you in the last 2, 3 weeks, no one even wants to talk to me about it, right? It's not something the sellers have confidence that they're going to sell and they don't want to entertain it, right? So, for example, we're in a multiple offer last night, and we had condition of finance and inspection, but it was four offers. House was probably worth around between 1250 and 1.3, and listed at the 1,199,000, and they had two firm offers. So I don't know which one they went with, but I would imagine they ended up getting over that 1.25 in multiples 7 days on the market. So I'm starting to see some of that. There is stuff definitely sitting there, and that's not that we're not in a. I'm not saying we're in a big bidding war situation by any means, but definitely a little bit more buyer confidence in the last couple of weeks for sure.
Just a quick thing. What's currently happening now? We're preparing for a hurricane, so just that's why I'm home today. So,
Hold on tight.
yeah.
And
Uh,
then so that was the first thing we talked about was the amortization period from 25 to 30, but then they also increased the insured mortgage cap from before you could only get an insured mortgage. So basically if you weren't putting down 20%, you would have to get an insured mortgage, but you can only get that mortgage up to $1 million. Now they've increased that by 50% to 1.5 million, right? Which is you still
makes
have to
sense.
obviously qualify for it, but like that's insane. If you're putting down 20% on a $1.5 million purchase, like your mortgage is going to be like what $1.3 million mortgage, which people do have. It's just you still have to qualify for. for all that.
Which kind of makes sense. I mean, the housing prices, especially in Toronto, Vancouver, like the higher echelon of, let's say, Canadian living or pricing rather, it's yeah. I mean, these should have been adjusted further or a long time ago, to be honest. I mean, it's like you said too. It's like you carry now a $1.3 million mortgage, but it's sort of on the regular right now, like a high mortgage amount.
Yeah,
It's
yeah,
crazy. It's
yeah.
nuts.
No, it is, and I don't think they could have did it before because things were out of hand. But now that things calm down, they're trying to get them stirred up a little bit more. Obviously, that's why they're putting all this into place. And then yesterday they announced the third one. Oh yes, was the borrows the basically when you're in a mortgage and you have to renew. So say you come to your term after 5 years, you had to renew your mortgage. Before you would have to go get requalified to leave that bank. So like you would have to say I was at Scotia and I wanted to renew my mortgage at the end of my term. To go to TD, I would have to go through the stress test again. And what happened is that pigeonholed a lot of people to stay with their banks because they wouldn't qualify if they went at the new higher rates at a new bank. So, like for example, Scotia had basically all of right to like kind of nail these people to the cross on rates just because they knew they couldn't leave, right? So now we're creating a little bit more competition in the market by taking out the stress test at that point because now, for example, someone from Scotia can go to TD without having to requalify, and they can basically shop the rate against each other type thing versus before there was they couldn't do it. So that's I think going to help a little bit with
But is that only for this is new for the uninsured, right? Under 20%?
um I have to look further if it's uninsured or insured. Payment for less than 20%. Yeah.
So
Yeah.
it's for the uninsured. So the or the insured rather. So the uninsured had this opportunity before. So it's basically people under 20% have this new option.
Yeah. So these are gonna a lot these are probably gonna be a lot of like first time home buyers after 5 years type thing. Probably don't have a ton of equity in the house. And with rates going up, they couldn't requalify.
Interesting. Well, it's good. At least they're moving towards it. Obviously, with the lower rates and plus all these new mortgage regs. I mean, it's going to be it'll put a little bit of boost into the especially the housing market right now.
Yeah, yeah, no, I agree. I think they're trying to eat up this inventory because ultimately we have to get back to building and real estate in Ontario. That's what our driving force is of our economy. So if we don't have people, if we're not selling new construction houses, people don't have jobs that will build those houses, and it's just obviously a food chain, let's say, and it's going to start getting affected soon if they don't make some drastic changes.
Well, there was some other stuff they put through. Wasn't it something with the Landlord Tenant Act, something like that?
I'm not too sure. I know Ford's talking about um hiring on more people for like the landlord tenant board for hearings and stuff to get bring down the wait times. Um, I'm not exactly sure all the details about them, but
I read one article that says it's the government that aims to build 4 million new homes, part of the most ambitious housing plan in Canadian history. This is intended to address the housing shortage and improve affordability. And again, these are apartments, rental apartments. We keep saying affordable houses like our kids can have an opportunity to buy something affordable. It's nothing to purchase. It's just to squat and rent.
right. Yeah.
Yeah. I think
The-
they passed something, they call it the Bill of Rights, the Renters' Bill of Rights. And this aims to protect the renters from unfair practices. I mean, they have the total power that the tenants in Canada, like or especially in Ontario, make a lease agreement simpler. Which okay, ensure transparency in the housing market. So they want to start releasing sale prices, which I think you know what I kind of like that. In the states, everything is open. You can't bullshit here in the
For
states
lease, for lease, you
for
said?
for sale, even for sale properties.
We have that kind of now already, no? With House Sigma?
The sold prices are there. Are they there already?
Yeah.
Yeah.
Oh, yeah, yeah, big time.
Oh, my bad. Yeah. What am I saying?
Yeah.
So why they mention that now? To be more transparent with sale prices, history available.
Maybe on the leasing side, I don't know if it's as
Maybe in general, because I think what happens is House Sigma did they kind of did a loophole where they're a brokerage and that's how they can release prices. So maybe that's in general now, like you can see it on every site or like MLS, let's just say that.
hmm.
Could
Maybe it's not. Yeah, I don't know. Maybe it's not just House Sigma. Maybe it's for everyone else too.
Yeah, I think so.
Yeah, because there, you're right. On there, when you're searching on any site in the U.S., you can have access. Like I've searched on different sites and you see the solds versus like on Realtor, you don't get the sold data.
Even you can see mortgage amounts. You can see people's mortgages when they took out originally. It's pretty um it's a lot, it's very open, right? It's very transparent. Sales history, like you can kind of, I mean, the House Sigma has that too when it's sold and stuff like that. Uh, sold history clearly, then yeah, mortgage history, property tax, like you can actually see the official bills. It's quite crazy, quite wild.
I think we're the polar opposite with privacy rules here in Canada.
Yeah, you can't lie. You know, if you bought a house and you got a massive debt, you can't tell your neighbor you paid it in cash. Yeah, it's true.
That's
It's
hilarious.
awesome. You have to have like the fucking number right down to like the spec because they'll find it. Mind you,
Yeah.
you only see when you pull. So if you pulled 100,000 in 2017, it doesn't mean it's 100,000 today. It could be whatever paid,
Mhm.
right? Yeah, or close to
Got
it.
it. So they might have paid it off.
Yeah. Uh,
Interesting. But yeah,
yeah,
no, obviously we're moving in the direction of making things more affordable again. So, but paying them down for a longer period.
yeah, it is what it is. Just heavy mortgage amount. I think it's like you said earlier, the good thing about this, it keeps market prices stable. We don't have that come down, which we're a little bit scared of with the construction industry being flat the way it is, and a lot of those tradesmen being unemployed, which to me that's the only worry when people talk about investment sake, like where do you put your money? I said, that's the only thing that scares me with Canada right now is the employment. Other than
Mm.
that, it should all work out, just the employment.
Yeah, I think we're currently seeing it at like 6.3%
It's
from
crazy.
August.
Is
Yeah.
that how what's the difference in the past? Did you do like a
Have
year
to,
over
no,
year?
I have to look into that.
The States is like 4% or something like
Something
that.
like, yeah, I think you're like 4.3.
Yeah, and it's up, I think, almost 1% since the last administration. So you think 1% of like 350 million people, it's like
That's a big number. Yeah.
3.5 million people unemployed.
It's, yeah,
It's huge.
that's crazy.
Yeah.
Wow. But I don't know. I don't know. Does it get into like now look at like what we're talking about, like, okay, we're extending amortizations 30 years. Like, do prices just continue to eventually not right now when once that inventory gets eaten up, does that price continue to climb and we get into something like in England where amortizations are 80, 90 years and you can pass that on to generations, like mortgage is transferable. Like, is that what
I think
into
so. I think so. At the end, banks don't want to own houses. They just want to give you money and get the interest on it. So like ideally, like I think in the past we always had this like, oh, the government will never do that and like do more than 25, 30 years. It's like, no, they won't do that they don't care. It's basically what policy gets processed based on the environment and who's getting paid off. Let's just face it, right? It's politics and big banks. So if the banks can lend out for have 80, whatever, 50-year mortgages and stuff like that, why wouldn't they? It makes sense. They're holding you for 50 years or whatever the amount is. It's crazy.
Yeah.
Yeah, I think it's just it's a fine line of living, right? Like I don't know. It's just you always look at the overlords, right? Again, if you look at history, like whatever, mid-century in or like 1500s in England or in Italy when the Medici family and stuff like that, where they're the biggest banks in Italy and probably maybe the world at that point too. But I mean, that's what they do. They want to make sure that they're collecting money all the time. These are overlords. They don't give a shit. So if we think that banks are different, it's not the case. If you go to any downtown, any part of the world, the highest buildings are always going to be a bank building. And
Mm.
that means they got more money. They're flexing. That's a flex. Oh, TD went 60 stories. Fuck you. I'm gonna go 71. You know what I mean? And then
Yeah.
it's like, oh, I'm gonna go 80. And you see, like TD's got the highest in Toronto, I think, right? Every time you see it, it's the highest building.
Yeah, yeah. Well, all of the banks are tall now, to be honest.
It's literally
You're
a
right.
flex, right?
Yeah, yeah. No, you're right.
I think you got to look at that. I think that's the future. Just, but how do you get out of big debt? That's the issue. Like, if you have $1 million loan, even if you're making $300,000 a year after taxes and everything, let's see combined income 300 grand, and that's a very high base, right?
I agree.
Um,
No, yeah, what do you walk away with personally at the end of the year
how
to
do you,
pay down that debt?
how do you pay it off? It's almost impossible. It's I don't know. It's crazy. I don't know if it's just our generation. Like we look at a mortgage, it's like who gives a shit? Just hold it. And then the generation past, like our parents' generation, was like every like $10 they're gonna put in today. They don't care. They're gonna keep putting $100, whatever it is. It just
You're right, but look at the difference. Our parents were like, pay everything off, no debt. We're like, okay, we can deal with the debt. It is what it is. And then the new generation is like, just rent it. I don't
just
want to.
it's wild, right? But even in our generation, we want more debt. It's like I went to the bank the other day. I'm like, in TD here in Florida, I'm like, how much more money can you give me? Like, you know what I mean? That's one of those things. I'm like, he's
But
like, wow,
it
because
depends what you're using it for. If
yeah,
you're
yeah,
using
yeah, yeah. No, no, for
you're using it
reinvestment, right?
for reinvestment, it's a different story.
And my wife is like very, she's very risk averse. She's like, no, no, don't give him more money.
We'll spend it.
I'm like, call me after, let's talk.
Yeah, 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 exactly.
Well, I'm thinking if you can get even because those are small business loans of 150 grand for what we're doing down here, I can use that money to kind of move, buy an extra few lots or whatever, kind of move it into the right direction.
Well,
It's
for sure. Even like we were talking the smaller banks too down there. It's you can go build a relationship like back in the day, which in Ontario, well, Canada in general, we don't have that opportunity because it's monopolized. But down there, we can build those relationships.
and I think now, obviously, because my broker's exam is finally out of the way. Like again, I keep talking about it because it was this massive weight on my shoulders. But at least there's
Mhm.
going to be more room for me to like make these appointments even in the evening or whatever, kind of move around. I don't have extra. I have too much time on my hands, and I feel right now without studying and stuff. So, yeah, I got to start building a few of these other relationships going forward. Because there's a Sanibel Captiva as a bank, and then there's SunTrust. Those are two banks I want to talk to, see
Mhm.
what they can offer us.
Yeah, no, it's the way to go.
Yeah. I think just even to touch again, so the SPP clause, sale upon purchaser's property clause in any agreement right now is dead unless it's some sort of like farm property or some sort of not even because you put an offer on that other property and it wasn't a bidding war. So
It was special. I would say it was a good value for that property, let's say that. But yeah, if something's sitting on the market, maybe you have a chance to get that SPP in there, but it has to be on the market for like I would say 60 to 90 days at least before anyone wants to even talk about it. And if it's just come out, don't even waste your time. It doesn't it's, no one's dealing with it right now.
so that's from like hot like prior city properties to like urban properties. Let's say the 905 and 705s now are starting to not take them either, unless like you said, it's been sitting for a couple hundred days, and then they're more inclined to take something
One.
like that. But
Yeah.
anything else?
And I think it's going to come down to sellers A, motivation, and B, potential situation. If they don't need to sell, it's one thing. If they really need to sell it, maybe they'll entertain it. But again, it all depends how much time they have too.
Hmm.
Yeah. So that's what we're noticing here.
Yep. All
And
right.
the
I don't
good
you
old
want to wrap this up? Do you have anything else to talk about, Mike?
No, I think that was it. The biggest things are we're obviously seeing them turn some levers to make things more affordable, right? And to get things sparked up. It's just a matter of time. So I think right now is the time to get moving because once it catches a wave again, it probably won't be a 2021 or 2022, but we'll be back into a balance or seller's market eventually, like we typically always do, I think, once that unemployment comes down and people start spending money again. So now's the time.
Well, what do you think the time frame is? Like we're going into 25 very shortly, next couple
Well,
months.
they're saying by the end of 25, we're gonna get into like rates being down to like Bank of Canada over a lending rate down to 2.5, 2.6%, which they just adjusted because BMO and I think it was BMO and TD just adjusted to like middle twos, but prior like 3, 4 weeks ago, everyone was at like 3%. Now they've dropped it again, right? Like recently, their projection. So if we're gonna be there 2.5% by the end. And obviously, let's say the banks are lending at 3.25. I don't know that by the end of next year, I think things are going to be jammed, like really moving. So I would say like end of this year, early spring is your opportunity at latest.
Political election next year also. I
They're
mean,
trying to get that going sooner than later.
well, they got a non-confidence vote yesterday, I think.
Oh,
So
is that what it was? Okay,
yeah,
so
yeah, yeah, yeah.
next next year.
So they it's probably gonna go to which is crazy. Like these, it's just like nuts, like crazy, crazy. Like kids, please, the way you vote, like pay attention to what's happening around you. This is all bad policy. I don't care what side or what color you chose, because it doesn't mean shit. They don't care about you. So just see what's better in the outcome. How are you living? Are you living better or you're living worse? I think that's what you got to look at. It's crazy.
Yeah.
Now with this non-confidence vote, now you got these like you can't and for Povia to kind of go for it, they thought that they had the power to move it. So what happens in the election? Maybe they don't have the power again to move it, the voting power, right? So I don't know. See what happens.
But I don't know. I don't know enough about politics to comment. But I know, put it this way. I know people talking to people on a daily basis. Everyone's fed up here. Everyone's fed up with the bullshit that's been going on for the last 7 years. So I don't know. I personally think there's a chance, but I think
Who are
there's so
they?
much to unwind.
Who are they pointing their finger at though? At a certain administration or just the world? Blaming the
People we're
world?
talking to, I'm
Yeah.
talking to, you say? I think a lot of people are pointing the finger to the administration. Uh, People that I'm talking to, let's say. Um, but even if he gets in, let's say nothing's happening overnight. There's so much that's been wound up in the last
Yeah.
7 years. To unwind it, you're gonna spend 7 to 10 years unwinding it and with zero growth, right? It's gonna be,
Oh my gosh.
I don't know, that's the way I see it.
My biggest fear is always is Europe, like North America turning into Europe. That's
Yeah.
it. It's my worst fear. I love Europe. It's gorgeous. Don't get me wrong. But if for people like us that don't grow up with affluence and money and a whole bunch of that stuff there, like we're screwed there. Like that place is you stay mediocre your whole entire life, even though if you have something to give, that system will always keep you in check. It's just that's what it is. That's what it's built for. That's an overlord. That's like the old lords and kings system, right? Um, and that's my fear because then we're talking about these mortgage rates and all this shit and going down and the mortgage carrying amounts now. It's insane. It's basically impoverished people, and you can't get out of that hole. So if you can't make money to pay debt, you have less time to think about making more money or thinking of other things. So you're like just focused on you like literally 9 to 5, whatever you're doing just to pay those bills. And it's a rat race. Literally. This is where the word really comes into play.
Yeah.
It's little hamster wheels in everyone's house, and everyone has to spin that wheel for 8 to 10 hours a day and have nothing. Because even if you have a $1 million home and it's like $800,000 mortgage, realistically, it's not really yours. I mean, it's your name's on title, but is it yours? I don't know. It's a
No,
scary thing. Yeah. It's a scary
you're
thing.
right. You're right.
Scary thing. My worst fear is North America turning into Europe. And I think Canada is going to be there a little bit quicker than the US. I think we still have a little bit more fight here in the US compared, but I think it's all going into that direction. It is what it is. Corporations are basically running everything right now, which is insane.
Yeah.
But
No, it's not getting better anytime soon, that's for sure.
yeah, that's it. We'll leave off on that depressing note.
Yeah. Catch you guys on the next one.
For sure. All right.
Ciao.
Ciao.